Hello and welcome back, guys. So in this particular session, what we'll be doing is that we'll be covering SBR's model question part 3. Okay, so I've already done for the other parts, right? So we'll be covering for this particular part. So this is from second number, we'll go from there because we had already done the calculation for the bond as well, and then how the quiver cost should be accounted for, right? So this was basically what was the case in this. It was held for thingy, right? It was assets, IFRS 5, assets held for not held for sale and discontinued operation, right? Similarly, in case of this thing, what we had encountered was goodwill. There was two type of transaction. This was intangible assets related. This was determining functional currency, right? So in question number B, what we've been required to find out is that what are the requirements is basically discuss the appropriate accounting treatment of restructuring cost in the financial statement of Backshot for the year ended 31st December 20x5. So accounting treatment of restructuring cost, right? Okay. So similarly, in this number 2, what is that? What is meant by good stewardship of company? Whether the restructure and recognition of restructuring provision in the financial statements are examples of good stewardship. Okay. Discuss briefly whether Mrs. Saw acquisition of the equity interest in Short could be disclosed as related party transaction. Yes, it will be, right. As per related party transactions definition, as per related party definition, identify and discuss the ethical issues surrounding from this action, right? Okay, so let's have a look at it. Let's have a look at the scenario first of all. So has a controlling interest in number of entities. Group results have been disappointing in a number of years. Directors of Berkshire have been discussing various strategies to improve group performance. The current financial year end is 31st December 20x5. The following personnel are relevant to the scenario. Mr. Saw, head accountant of Berkshire Co. Mrs. Dawes, chief executive of Berkshire Co. Mike Starr, nephew of Mr. Shaw. Mrs. Blah Blah, wife of Mr. Shaw, right? So Mr. Shaw and ACC number, the head of accountant, is not a member of board of directors. Mrs. Dawes, the chief executive of Berkshire, is an ACCA member during December 20x5. Okay, so year ended is current financial year is 31st December 20x5. Okay, Mrs. Dawes revealed plan to Mr. Saw of a potential restructure of the Berkshire Group, which had been discussed at board meetings. The restructuring plans included a general analysis of expected cost, which would be incurred should the restructure take place. This includes legal fees, relocation of staff, and also redundancy cost for a number of employees. One such employee to be made redundant is Mike Starr, is the nephew of Mr. Shaw. Mrs. Dawes is insistent that Mr. Shaw should include a restructuring provision for all the expenditures in the financial statement of Berkshire Co. for the year ended blah blah. Mrs. Dawes argues that even if the restructure did not take place exactly as detailed, similar level of expenditure are likely to be incurred on alternative strategies. It would therefore be prudent to include a restructuring provision for all expenditure. None of the other than Mrs. Saw have been notified of the plans, although Mrs. Dawes have informed Mr. Shaw that she expects a final season and public announcement to be made prior to the authorization of the financial statements. Mrs. Saw, the wife of Mr. Shaw, the head accountant of Berkshire, is not an employee of Berkshire Co. and does not know about proposed restructure. However, Mrs. Saw recently acquired 5% of the equity shares in Berkshire Company. Why was that? Restructuring. Okay. Is considering informing his wife of the proposed restructure so that she can make an informed decision as to whether divest her shareholding or not. Mr. Shaw is concerned that in the short term, at least, the inclusion of any restructuring cost would be harmful to the profitability of Berkshire Co. It is also uncertain as to how the market may react should the restructure take place. It is, however, anticipated that in the long term, shareholders value would be enhanced, right? Okay, let's write. Okay, two A and then I write. Oops. Discuss how the appropriate accounting treatment for the restructuring cost in the financial statement of bank should go for the year ended 31st December. Okay, we will definitely talk about that. First of all, let's list out the requirements. So whenever we are talking about restructuring and all, we need to always be careful about the criteria. Provision for restructuring should only be recognized in the financial statement of backshot company where all of the following criteria are met. What are they basically? They are: it is probable that the outflow of resources embodying economic benefits will be required to settle the obligation. Next requirement will be a reliable estimate can be made of the amount of the obligation there is a present obligation as a result of a past event. Okay, there should be this thing as well, which in this particular case won't qualify for sure, as the amount can't be determined exactly, right? It says in the question as well, and it's not basically, it has not been announced to other people, that's why it might not happen as well. IAS 37, which is about provisions, contingent liabilities and contingent assets, states that it would be extremely rare that no reliable estimate can be made. A best estimate of the expenditure required to settle the present obligation should be provided as at 31st December 20x5. Okay, the best estimate of the expenditure required to settle the present obligation should be provided as at this date, right? If it meets all the criteria, In case of restructuring provision, restructuring provision, this should include only this includes only costs associated or cost arising from restructuring. Okay, from restructuring, and should exclude other costs related to ongoing activities like relocation of staff. Hence, the relocation costs would not be included. Not relaxation. Relocation cost would not be included as it is an ongoing activity related expenditure. Right, that is one thing. Other thing that we should not miss is an obligation is regarded as probable when there is where the occurrence is unlikely. In this case, the occurrence is probable or not is not really clear. Mrs. Dawes has indicated that alternative strategies are possible and further clarification is required, then only it would be considered as probable. Right, next thing that we also need to write about is, let's not forget, what is obligation, right? Provision is usually created for constructive for obligation arising out of legal or constructive obligation, legal right or constructive obligation, right? So for a contract to be regarded as constructive obligation when the when these are expected out of company as a result of past event. Past such event has not been mentioned in the question. Additionally, the plan must be detailed and announced. To the affected parties. However, in this case, alternative strategies are possible. Means that the plan isn't concrete yet. Therefore, it does not satisfy the criteria. The statement is the plan should have included the date of implementation, and then after that specific expenditure to be incurred, and the time frame of transition. The announcement has not been made publicly and to other employees. As at the reporting date. Therefore, no obligation is at existence, so provision isn't required. Mrs. Dawes has mentioned that restructuring plans would be announced before the authorization of the financial statements, which means that it that it would be reported as non-adjusting even if it is announced. Okay, that much information should do it. And proper disclosure of nature of restructuring along with financial estimates should be present. Okay, that's that. And then after that, what we need to do is question number B. What do we have here? Not B, I mean 2, right? So what is meant by good stewardship of a company? Whether the restructuring and the recognition of restructuring provision in the financial statement are good examples of stewardship? Hell no, that's not a good example anyway, right? We knew that. That's a common sense. Stewardship is the principle which mentions that the resources of the company should be utilized properly and effectively. The directors are responsible for the shareholders' value, so they must perform steward role in every decision. The director should always refrain to expose entity towards unfavorable events or unfavorable events which might impact the shareholders' value. And comply with all required provisions of the law. Right, which might impact the entity. We'll talk about that in the next paragraph. The question does not clarify why the company has been performing badly in recent years. Our responsibility of good stewardship is towards the shareholders. Both current and potential, right? Current and potential, and lenders towards stakeholders, shareholders, both current and potential, and lenders. They must be provided accurate and correct information because financial statement is the only form most only form of communication which happens between these stakeholders. And they have the right to know how the resources is being utilized. Mrs. Dodge wants the provision expenditure included within the financial statement, even though there is no obligation. This is against the fundamental principle, right? Fundamental principle of faithful representation as the statement is not proven when dealing with uncertainties. Therefore, it should not be recognized. Okay, that much story and everything should be good. Don't need more than that. Third number. What is the requirement? Discuss briefly whether Mrs. Shaw's acquisition of the equity shares should be disclosed as a related party. Hell yes. Let's give the definition quickly. What is related party, right? What has happened with this particular woman? Mrs. Shaw, blah blah blah, is not an employee, does not know the propose. Okay. Okay. Mrs. Shaw isn't the employee of the entity and holding only 5% interest would not allow her to have control over the entity, right? She would not even have significant influence over the operational decisions. Five, significant influence over the entity and would not be able to participate in the operation and financial decision making. So it could It seems like C isn't a related party. Hang on, wait a minute. The last cliffhanger is coming. However, Mrs. Shaw is deemed to be close family member of Mr. Shaw as per the definition of related party. Is deemed to be close family member of Mr. Shaw, which is basically key management personnel, right? Mr. Shaw is head accountant of Backshot Company, but it is unclear if he is a key management personnel. There is no evidence that he has authority, he has control over planning, directing, and controlling. He has authority over planning, controlling the activities of Backshot. Therefore, it would not be considered a related party transaction. Okay, controlling. Okay, next thing is coming to B. Why is it saying C when it should have been thingy, right? Yep, so this is not that. Should have been 2 of the nature present principle. Right. Okay. So I just concluded that it's not a related party transaction. Okay. So otherwise you could have concluded that, you could have mentioned he's a key personnel, and then you could have concluded that as well. But it's not really clear. It's not really clear. That's why I concluded it's not a related party transaction. Okay. So similarly, in question number B, what do we have? Identify and discuss the ethical issues arising from the scenario which Mr. Shaw needs to consider, and what action should we take as a consequence, right? Clarity of discussion. Okay, good. Mr. Shaw is facing a lot of ethical dilemma arising from the scenario Mrs. Dawes' insistence to include provision for restructuring insistence could be considered as a threat as an intimidation threat, as she has not clearly mentioned, as she has not mentioned the cause for making the provision early. Mr. Shaw is a member of ACCA, and therefore this kind of behavior would not be allowed even as a mistake. He, like other members, should operate by ACCA Code of Ethics and prepare the financial statement based on these principles. He should instead remind Mrs. Shaw Mrs. Dawes, Dawes, okay. I think I have made a mistake over here as well. Okay, Mrs. Dawes. Yeah, all good. Remind Mrs. Dawes about the ethical principles and should not do as he says. If Mr. Shaw does so, then he would be breaching the principles of integrity, objectivity, professional behavior, and professional competence and due care. Integrity tells us that we should be honest and straightforward in all our business and professional relationships. Objectivity is to not to allow bias, conflict of interest, or undue influence of others. Is not to allow bias, conflict of interest, and undue influence of others to override professional judgments. Professional behavior is to comply with all relevant laws and regulations and to avoid action that discredits the profession. Professional competence is having the knowledge and expertise to provide service client at a highest standard. Mr. Shaw would be uh, facing a self-interest threat of the fact that his wife is holding Bagshot's share and sharing the restructuring plan is clearly an insider trading, which is breach of confidentiality principle. Confidentiality principle. So, what do we say then? Mr. Shaw should not be under the influence of Mrs. Dolls to create a provision but should rather discuss the matter with internal audit committee, and if they don't take action, he should seek a legal counsel or guidance from ACCA, and even then, if the matter is unresolved, he should resign from this position. Right. That's how the step should be taken. But does it actually say that? What action should he take as a consequence? Yeah, he should do that. That's good. Looks good, I guess. Right. So this is how we basically answer this kind of question. So does not have to be exactly the same, right? But main points should be covered. Okay, and that's the gist of it. So I'll see you in the next one. Our second number question has been done as well. So we will be doing question number 3 on the next episode. Okay. So until that time, take care. Bye bye. See you next time.